CATEX TV. My name is Frank Fortunato. Today is Thursday, March 31st, 2016, the last day of the first quarter of 2016. If you want to follow us on Twitter, please go to CATEX TV. U.S. life insurer MetLife won a legal battle against the United States Financial Stability Oversight Council, the FSOC, to shake off its designation of being too big to fail. A federal judge in Washington afternoon rejected the government's rationale for classifying MetLife as a non-bank, systemically important financial institution. If you're a SiFi, you're subject to more intense regulatory scrutiny and are forced to hold higher levels of capital, as its failures are deemed to be a threat to global financial stability. Other non-bank SiFis include AIG, Prudential, and GE Capital. Quick as a wink, GE Capital filed a motion to be asked for release from supervision by the Federal Reserve Thursday afternoon as a SiFi, saying that it had shrunk its once massive financial services arm so that it no longer could conceivably pose a threat to the global economy. And finally sent yesterday afternoon, GE said that it's cut its total assets in its financing division by more than half, as CEO Jeff Immelt has turned the focus of the company back toward more traditional production. Swiss Re said that its estimate for the insured property loss from the Tianjin explosion in China in August now could be as high as $3.5 billion, said that this number could even increase. The Tianjin port explosions were the biggest man-made loss ever seen in Asia. The complexity of the loss event highlights accumulation risk in large-scale transportation hubs in Asia. Swiss Re said that the Tianjin blast event is now the third largest man-made insurance and reinsurance industry loss ever recorded, behind the Piper Alpha platform explosion, which cost $3 billion, and of course the loss of the World Trade Centers in 2001. The Florida Hurricane Cat Fund is set to revisit the private reinsurance market again this year. You'll recall that last year, when it came back to the market, there was wide-scale applause throughout the reinsurance industry. In a presentation given to the Florida Cabinet yesterday, the executive director of the State Board of Administration, Ash Williams, said that a reinsurance purchase of at least $1 billion was advised. They're looking to buy $1 billion of reinsurance cover at an attachment point of $11.5 billion. No vote was taken, but the council was directed to go out to the market to gauge the appetite for the renewal. The appetite will be quite strong. There was a 5.0 Richter scale earthquake in the central Iranian city of Nagan earlier today. This is in Shamrohat province. There were no reports of any damage or injuries. This is a very active seismic region. In the West Bengal state in India, in the city of Kolkata, there was a collapse of an overpass that was under construction, sending down debris, concrete chunks, and reinforcing rods on motorists and people passing beneath it. 14 people have been killed. Northwestern Spain has been inundated by torrential rain that has led to widespread flooding as well as flash flood alerts and evacuations. The region of La Coruna has been badly affected, with well over a month's worth of rain just coming in the last 5 days. Since March 26th, 137 millimeters of rain have been recorded. 110 millimeters fell in just 48 hours. According to Swiss Re, only $37 billion, or just about 40% of global catastrophe and man-made disaster losses, were covered by insurance and reinsurance in 2015. This represents a coverage gap of about 60%, which is the highest yet. The fact that insured losses are so far below average this year was only $37 billion compared to the average of about $62 billion on a 10-year rolling average. But Swiss Re is saying that the fact that insured losses are so far below average once again clearly demonstrates the insurance protection gap, which is the opportunity facing the reinsurance and insurance industries globally. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.